The government's going to test the appetite for an IPO from the Indian Railways stable with RITES, the engineering and consulting firm looking to raise 460 crores through the offer for sale. Soumeet is here to break down what is in it for the investors and some basic details. Soumeet, good morning.
Good morning, Neeraj. So, RITES, that is Rail India Technical and Economic Services Limited. The company is looking to raise as much as 460 crore rupees at a price band of 180 to 185, and at the upper end of the price band, that is 185. The market capitalization of the company would be close to 3,700 crore rupees. Now, if you see, it is a Mini Ratna status company and the only export arm of railways, but mainly it is a consultancy business. It consults about the viability and feasibility of a project and also provides assistance and technical services to the company. Now, as of FY18, the company's order book was close to 4,800 crore rupees. Now, of this, 77% the company had received from government companies, and over FY16 to FY18, the order book grew at a compounded annual growth rate of 36%. Now, other than India, the company has done various projects in 55 other countries in regions like Asia, Middle East, Africa, Latin and South America. Now, if you see the order book of the company, 53% of the orders the company has received for consultancy services, which generate an EBIT margin of close to 35 to 42%. 15% of the order book consists of export sales, where the margins have fluctuated in the range of 17 to 30%, and 29% of the order book is related to construction activities, where the company is yet to book any revenue. They're hardly booking any revenue. So this order flow will generate into revenue going forward. Now, if you see the financials of the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 9%, 11% and 13% respectively over FY13 to FY17. On the balance sheet side, now that is very strong for the company. The debt is as low as 70 crore rupees and the book value per share is 111 rupees. Now, the company has own cash of close to 1400 crore rupees, which translates into a cash value per share of close to 69 rupees. On the return ratio side, on an annualized basis for FY18, the return ratios are tad below than what it was in FY17. The return on equity is 14%, return on capital employed is 13%, and return on asset is close to 6% for the company as on an annualized basis for FY18.
Soumeet, so has the company been paying consistent dividend, and is the price attractive for investors?
So if you see, the company has been consistently generating cash flows for the last 5 years, and they have been consistently paying dividends to its shareholders for the last 5 years. And if you see on the valuation side, the valuations are not that expensive. The price to earnings on an annualized basis for FY18 is 11.4, market cap to sales is 3 times, while EV to EBITDA is 6 times. So these are attractive valuations. And if you see the brokerage reports, now all the brokerage reports that we went through had a subscribe rating for this IPO on the back of its reasonable valuations, robust order book and strong financials.